Lucy Cheshire Smith for Skillings.net. A single line in a White House proclamation detonated one of 2025's hottest commodity trades. After weeks of signalling sweeping copper duties, the administration imposed a 50% tariff on semi-finished copper products, but explicitly exempted refined copper cathode. Within minutes, COMEX copper futures plunged roughly 20%, vaporizing a domestic premium that had lured metal into the US and blowing up the cash and carry arbitrage between the CME and the LME. The market spent July bracing for across-the-board copper tariffs. That expectation ballooned a CME premium over LME as metal was diverted toward New York in anticipation of tariff-protected pricing. Then came the surprise. Cathode stays untaxed for now, while wire, tube, and other semi-finished goods face the 50% levy from August 1st. Pricing power flipped instantly back toward the global benchmark, collapsing the US premium and sending COMEX limit down in a historic intraday move. The tariff carry worked like this. Import refined copper into the US, warehouse it, and sell CME futures against it. The expected tariff would harden a domestic premium versus LME, juicing the spread and locking in profits on delivery. In late July, that premium spiked above $3,000 tonne, an arbitrage bonanza that pulled cargo stateside. When cathode was exempted, the logic imploded. CME-LME arbitrage snapped, futures repriced lower, and the stock and hedge book turned into a scramble to unwind. COMEX fell 19 to 22% intraday on the announcement, its steepest recorded drop, while LME 3-month barely budged by comparison. Ahead of the decision, US inventories surged up to 170% to 253,000 short tons, a 21-year high, as traders staged metal for the tariff trade. LME stocks shrank. The CME premium that had widened to 3,000 tons in July collapsed once cathode was spared, erasing the arbitrage window. The upside? US fabricators that buy refined copper avoid an immediate cost shock. Major exporters of refined copper, Chile, Peru, keep access to the US market without the 50% hit. The downside? Traders who warehouse cathode for the tariff carry now face basis risk, storage costs, and potential re-exports. US producers miss out on the near-term windfall that a blanket cathode tariff would have created.